Welcome to the Traders Help Desk Online video collection. In this video I'm going to go through two alerts that I had this morning. One was on the Euro, and what I want you to pay attention to is the time that this was actually sent. And on this one we had ADX Peak on the Euro 180-minute chart at 3:23 a.m. On the Swiss franc, we had a magenta peak on the 180 at 4:16 a.m. So both of these are in Eastern time. So what we're going to do is go look at both of these charts and see what happened after the ADX peak. Now again, this comes into your email or your iPhone or smartphone, whatever you have. So we're going to minimize these. First we're going to look at the Euro, and then we're going to look at the Swiss franc. So this is when the alert came in, okay, and it was telling us that we had this magenta peak coming in on the 180-minute chart. Now if you're looking at a 180-minute, you could go down to a 12-minute and wait for a Buddha. If you don't want to be in the market that long, because you're going to be in the market pretty long on a 12-minute. If you want to trade the 3-minute, you're using the information from the ADX peak to determine the market direction on the lower time frame. So let's walk through this one more time. The ADX line is blue. You get a magenta peak, so price has been going up. The ATR is below price. So this tells us that price will come down towards the ATR. So if you look over here where I marked that, you did have a pullback to the ATR. Now the one thing that you do not have is diverging volume, because you don't have two volume bars here to measure. Could you have entered that? Sure, you could have, but again, you had no way of knowing if this is based on diverging volume. The next place that you have a potential entry is where it makes this isolated high. Now you could have measured from this volume bar to this volume bar and said, okay, is volume decreasing on the highs? And I'm going to mark these in a light blue so that you can see them. And if you compare the two, you say, oh yeah, volume is decreasing. This is typical volume behavior in a downtrend. Now the next point where you could potentially enter would be here when you have exactly the same setup. You have an isolated high. These are not my preferred setups. I really prefer to enter at the ATR because that gives me my lowest point of risk. So the next place would be here, but if you compare these two volumes, it's actually increasing. That's not typical volume behavior in a downtrend. This does not give you an entry. We then have a magenta peak here. It pulls back to the ATR, and just as it gets to the ATR, it gives you diverging volume right here. This is actually my preferred entry. So if you entered there and you place the clipper, then you got clipper 1 and then break even on the remainder of the contracts. So this is on the Euro, and to me this was the only entry point that you actually had, because I think over here you don't have two volume bars, so that would have been hard to actually compare to see if you have diverging volume. This one actually did give you diverging volume. You were risking 8 ticks and you made 16 ticks on part of your position and at least 2 ticks on the remainder of the position. Now if you had noticed this magenta peak here, which was formed on this bar, you might have got a little bit more than 2 ticks, but I'm going to call it at 2 ticks. Then we have the Swiss franc, and on the Swiss franc we got the notification here that we had a magenta peak. So we're looking for it to actually pull back to the ATR, which it did here. Did so on diverging volume, Because we had a magenta peak here, it has to come within 5 ticks of the ATR. So if we look at this low, which actually formed divergence, the low is at 0690 and the stop is 0681 at that point. You could not have entered because it had not pulled back to within 5 ticks of the ATR. Then when you come over here, you still have the diverging volume. You are now within 5 ticks of the ATR. Well, let me make sure. 0876 and the low has been 0690, so you're within 4 ticks at that point. From the low to the ATR is now 5 ticks, so you actually could have entered here. You've already had the diverging volume, and let's see if it made at least clipper 1. No, this one you would have been stopped out of on this bar, because anytime it closes and it flips the ATR, actually was in this one, you automatically exit your position. So in this case, you entered at 0696 and you were stopped out at 0694. So you lost 2 ticks per contract on this trade. It flips the ATR again here. We're looking for a pullback towards the ATR. We get that here. Now, is it on diverging volume? Yes, it is on diverging volume. You would go back in on this one and you get clipper 1. Right now you have a magenta peak, which tells you you're going to pull back to the ATR stop. The ATR stop is closer than break even, so I would stay with this one because it should bounce from the ATR again. You're doing so on diverging volume again. Now you have clipper 1, clipper 2, and clipper 3. So although on the first trade you lost 2 ticks per contract, on this one you made 14 ticks, 28 ticks, and I believe it's 42 ticks. Then you made a magenta peak again. It will pull back now to the ATR. Your hard stop would be at clipper 2. So this is one that immediately, if you still had contracts on, when you saw this magenta peak come in, you would exit because the ATR is below where your hard stop would be. And again, this is just using the benefits of the magenta peak on a higher time frame. Now when I say a higher time frame, I'm not talking about a 12-minute. When I say a higher time frame, I'm talking a 180-minute, a 720, a 1440, any of those, because it dictates the trend on the lower time frames. So I know when I see these magenta peak alerts that if my ADX line is red, then price will be moving upwards towards the ATR. If the ADX line is blue, then that tells me that the price would be moving downwards towards the ATR, which will form a downtrend on a 3-minute or any of your lower time frames. You'll have a downtrend. This is the same setup that I was using on the Japanese yen earlier this week. It works across multiple markets, multiple time frames. You're using the projection power of the ADX to determine the market direction on the lower time frames.